Today, I want to talk about how Congress has just filed to fire Gary Gensler. They believe he's failed in his role of chairman of the SEC, and as a result, they want to restructure the operating structure of the entire of both the SEC and Finra. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Warren Davidson tweeted saying news. Today I filed the SEC Stabilization Act to restructure the SEC and fire Gary Gensler. He said US capital markets must be protected from a tyrannical chairman, including the current one. It's time for real reform and to fire Gary Gensler as chair of the SEC. And his statement says that's why I'm introducing legislation to fix the ongoing abuse of power and ensure protection that is in the best interest of the market for years to come. He said it's time for real reform and to fire Gary Gensler as chair of the SEC. Now, in the past, many people have been worried about Gary Gensler being fired in case Hester Pierce takes over his role of chairman of the SEC. Obviously, having Hester Pierce as chairman of the SEC would be even worse, as we know that Hester Pierce has voted against additional short-selling regulations and additional short-selling disclosures. But actually, this filing that's been made today by Warren Davidson actually completely changes not only the structure of the SEC, but also the power of the SEC chairman. Obviously, under the old structure, Gary Gensler heads up the SEC as the SEC chairman. He's effectively in charge of everyone below him. This is obviously a very top-down approach where the managers oversee and control everything that any kind of supervisor or assistant does. But effectively, the new structure that's been proposed is to create multiple different commissioners that effectively have equal power ratings, where no one individual commissioner or groups of commissioners can have a larger power. And also there's an executive director on top of that. This article from Zero Hedge says, according to Fox News, the bill would remove Gensler from office and redistribute power between the SEC chair and commissioners. It would also add a sixth commissioner to the agency to disallow any party from holding a majority on the commission, and also create an executive director position. As Warren tweeted, he said the SEC Stabilization Act explained it fires chairman Gary Gensler, and it means that all rulemaking, enforcement and investigations is conducted by 6 separate commissioners with equal power levels. And it creates an executive role for day-to-day operations to make sure expenditure is paid and to make sure all employees turn up on time. I personally actually think this is the best of both worlds. Not only do we see Gary Gensler being fired, but we also don't see Hester Pierce taking over his role as chairman. Effectively, that role as chairman gets split between 6 individual commissioners with equal power levels. I guess what it really boils down to is if Citadel has paid off just Gary Gensler, or if Citadel has paid off the entire of the SEC. I would like to see more enforcement around short sellers under this new structure, but I guess only time will tell. Now, I also think this is a really interesting time for Congress to propose firing Chairman Gary Gensler, likely because they're going to try and pin the market crash blame on Gary himself. As Travis tweeted, he said there's 5 billion put options on the S&P 500 at the end of this month. He said something big is going to happen this month. We can see, looking at the max pain for the S&P 500 and looking at the calls and put options, we can see there's nearly triple the amount of puts on the S&P 500 as there is calls at this very moment. That basically means that many of these institutions, many of these hedge funds, many of these banks and many of these individual traders are expecting a large move downwards in the S&P 500 this month. And obviously, if the S&P 500 in the market does indeed crash this month, and if AMC and GameStop do end up squeezing, the Fed is going to need someone to pin the blame on. And obviously, if Gary Gensler has just been fired days beforehand, that gives the Fed the perfect alibi, or the perfect scapegoat to take the blame. They can effectively say how Gary Gensler failed at his job as chairman of the SEC and allow these short sellers to run rampant. They can basically say the market is crashing due to this overload of synthetic shorts, and also those same illegal short sellers were also shorting the banks that made the problem even worse. And something else that suggests the market is likely to crash is the fact the owners of Walmart have been dumping a giant portion of their Walmart stock position. G-Man tweeted saying the Walton family, owners of Walmart, have sold $400 million worth of stock over the last 4 days. And he said insiders selling $400 million of stock in just 4 days is never a good sign. Again, this likely means a turnaround is expected in the market over the next few days or next few weeks, basically kicking off the next leg down of the market crash. And again, as I said, if this market crash does come to fruition over the next few days or next few weeks, they will need someone to pin the blame on, aka Gary Gensler. Now, it is also really interesting that kind of adds to this is the fact that JP Morgan is actually saying that some of the smaller short sellers have already started closing out of their short positions on some of these smaller stocks. They've said much of the flows and positioning data points to increased FOMO or fear of missing out, and we saw fairly strong short covering over the past week. Now, as I explained in my video earlier, these shorts are going to focus on closing out their less risky short positions before closing out their riskier shorts. In an order of risk, these short sellers are going to close out of their short positions on growth stocks, then close out of shorts on large tech stocks, then close out of shorts on smaller meme stocks like Bed Bath & Beyond, BlackBerry and Nokia, and then close out of the big short positions on AMC and GameStop as a last resort. We know that closing out of these smaller shorts like in growth stocks or in large tech stocks may cause them a few $100 million or a few $1 billion in losses, but it doesn't explode their entire fund. However, obviously closing out of those shorts in the larger, more risky short positions in AMC and GameStop would not only destroy their fund or destroy one fund, but likely collapse the entire illegal short selling hedge fund industry. And as I said, what is interesting is that JP Morgan is saying that actually some of these smaller, less risky short positions are already being covered and closed out of. Now, on top of that, you may know that Finra has been required to deliver the blue sheet data in relation to MMTLP trading. Now, Finra has originally declined that requirement, basically saying that it'd take too long and it'd be too erroneous to compile all of that data. They've said Finra doesn't actually review any of the blue sheet data submitted. It effectively just gets submitted and nobody cares and nobody looks at it. But as Junk Savvy tweeted, he said that rumour has it is that Finra met with senior staff of the House Financial Services Committee and 3 times refused to provide a share count. They've refused to provide this blue sheet data and a share count not just to the SEC, but also to the House Financial Services Committee now. This is exactly why I think the courts need to force Finra to disclose this blue sheet data or allow MMTLP to trade and force all of the shorts to close out of their short positions. Now, this rumour originally came from this video by Trading Secrets, suggesting it's information directly from the Congress and Finra meeting. And he's also said that Finra is also in the New York Supreme Court this week, where they'll likely be forced to hand over that blue sheet data. Obviously, any scenario where blue sheet data is handed over or a real share count is exposed in the courts, and where the courts force these short sellers to close out of their short positions, is good for the overall squeeze. As I've said before, whether the squeeze starts in AMC or if it's in GameStop or if it's in MMTLP, it doesn't really matter, because as soon as one stock squeezes, all stocks will squeeze. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.